Hello, everyone. Welcome to a Wall Street for Main Street podcast special. I'm Dawoud, and today's special guest is Fabian Calvo from FabianForLiberty.com. Fabian, thank you for joining us today.
Thanks for having me on, Mo. I appreciate it.
We're glad to have you. Now, your background is right now you run a real estate business. Is that correct? Tell our listeners a little bit about your real estate before we go into the housing market.
Yeah, well, I own and operate the Node House, and we basically buy non-performing debt, either commercial, residential as well. So we deal with a lot of different financial institutions, local banks, and we've also been buying a lot of bank-owned properties as well, in really markets across the country. So it gives me a pretty good insight with just different markets, what's happening in those markets, and also what's happening with lenders and bank balance sheets, and really the list goes on.
Oh, okay, that's interesting. So your company is more into the commercial real estate rather than residential real estate.
Yeah, we really play in both ponds. Yeah, we definitely have had more of a strategic growth or more strategic objective in obtaining the commercial side of things, but with housing, we feel that at least for now it's hit a bottom, and it's definitely, we're seeing prices for working class type housing at just, in some cases, 60, 70, 80% below replacement cost, depending on the market. And, it's deals that you can get 60, 50% yields on by using them as rental properties. So it's kind of an interesting time in the market, a lot of opportunity, but a lot of people that don't know what they're doing could also make some pretty bad decisions.
Right. And we've seen that during the housing bubble, people getting in and not getting out when they should. So I want to transition to the housing market. In your latest video interview that you did, you're predicting another crash in the housing market after the election with a lot of massive foreclosure. Why are you predicting that? I mean, survey has shown that 65% of investors plan to buy more homes during the next 12 months, and the S&P Case-Shiller Index of property values in 20 cities has been its highest increase in more than 2 years. So the data out there is saying that the housing market is going back up, but you're predicting a crash. Why is that?
Well, I wouldn't necessarily say I'm predicting a crash. What I am saying is that, first off, on any given night in America, there's close to 20 million vacant homes that are just sitting vacant. There's 1 million people plus in foreclosure, another million that are past due, that are likely end up in foreclosure. Now, and then the biggest factor is that if you take all of the debt for everybody who owns a home, there's only about 3%. There's only about 3% worth of equity. So 97% is debt for most homeowners. That's taking into effect everybody who owns a home that has a loan. Only 3% equity. It's a staggering number. And so if you believe that defaults are an indication of low equity or no equity, then I think that we're going to be seeing that. I mean, it's directly tied to the greater economic picture. And we're seeing many of these big corporations shed more and more jobs. I don't believe or buy into any of these government housing or government employment figures like the one that came out today. We're barely creating enough employment to keep up with population. So I think there's going to be a continued stress on homeowners. You're seeing a lot of people also just that are going to be walking away from housing, that are going to be basically moving in with their parents or moving in a couple families living in one house. That's been a pretty big trend that I think is going to continue as well. So I think there's still a significant amount of malinvestments sitting on bank balance sheets that will need to be corrected, and that's going to continue for the unforeseeable future.
And you make an interesting point. You mentioned the unemployment number that came out today. To me, how could the housing market go back up when nobody out there has jobs? I mean, buying a house is not really a small part of your expense. It's the biggest part of your expense. So if no one has a job, how could the housing market go up? That's the logic I use on why I think the housing market has a long way to go before it recovers.
Yeah, no, it's a good point too, Mo. And I would also add that, for the people that that are saying the housing market's turning around. Don't get me wrong. I mean, I'm investing in the housing market. I think it's a great time to be in housing. People can make some really significant returns, but you really got to know what you're doing. But I'm saying in the more long-term view, much of it is fueled by the cheap credit of the housing of the Fed. I mean, the Fed, in essence, is trying to reflate the housing bubble by artificially low interest rates. Those rates will not be able, they're not going to be able to keep those rates at zero forever. So when rates go back up to their average, which has been in the 5, 6, 7%, it's going to basically, real estate prices will significantly suffer. I mean, they'll have to go down. When rates go up, values go down, and that will eventually happen. We're not too far from that.
Oh, and I agree, especially people that have ARM mortgages. If the Federal Reserve decided to raise the interest rate, it'll have a big effect on people with ARM mortgages, because then they have to, their mortgage rate, the mortgages will go up as well.
Yeah, absolutely. I mean, you take a look at commercial real estate, for example, over $1 trillion in commercial real estate that's coming due in the next 5 years. Much of it's already started to adjust. Out of that trillion, it's estimated that 50%, if not higher, is already underwater. So those people, they're not going to be able to refinance. They're going to default unless the bank does what they've been doing. Many commercial banks is extending and pretending the loans. That basically extending a loan, pretending everything will turn around and be fine. Now, I deal in this world on a daily basis, so I can't tell you how many banks that I've spoken to that they're literally their only strategy, Mo, for deleveraging the bad toxic mortgages on their balance sheets is hoping that the market recovers. That's a pretty bad strategy for deleveraging your debt, and a lot of local banks, a lot of some national banks have that strategy, and they're going to get hurt.
Oh, yeah. Well, if you're a big bank, you can just go to the Federal Reserve and ask them to take that toxic asset off their balance sheet and give it to them in exchange for cheap dollars.
That's exactly right.
Oh, great. So I want to transition here to what's going on in the macroeconomic. As you know, the unemployment numbers came out today, which smashed the price of gold and silver. And I just wanted to ask you, now, this Great Recession or Depression started in 2008, and yet we're almost going into 2013, and we haven't gotten out of it yet. And did that show you that central planning economic had failed and that free market would have gotten us out of this mess a lot quicker?
Yeah, well, the policies of the government has in essence prolonged this. I mean, we see this, so we've known this for a while. I mean, we saw this in the Great Depression. FDR's policies of big government and the New Deal actually extended the Depression, made it longer, made it more difficult for Americans. And, many people believe that we got out of the recession, starting with the war. I wouldn't even believe that. Nor that that's good for the economy. I mean, we've been in war in the last 11 years for the last 11 years, and we're still have some significant economic problems. But Mo, what I believe it's not so much. We're at the end game of this economy, and I don't mean that there won't be continuing functioning markets or there's still not a great transfer of wealth that's taking place where there's going to be a lot of opportunity, because there's a tremendous amount of opportunity out there. But with respect to the out of control debt, with respect to things like derivatives, all of that is going to come crashing down at some point, I believe, in the not too distant future. So, when I see the Federal Reserve buying 61% of all U.S. Treasury debt, and their belief is that the public sector is going to step in, or the private sector is going to step in and buy that. No one's going to compete with the Fed, so they're going to continue to monetize the debt. They're going to continue to roll out QEs. Look at in Hurricane Sandy, there was talk of having a special round of quantitative easing just to deal with the effects of Hurricane Sandy. This is how desperate these banksters are. So eventually, again, their plans will fail, and we have not only just the last 5 years of central planning, but we have at least 100 years of data compiled proving beyond a shadow of a doubt that central planning always ends up in ruin.
And that's an interesting point. I did not know that they might do another special round just from this hurricane. That's an interesting point there. Now, a lot of people ask, who are very against capitalism and free market, how would the free market be able to get the economy out of this recession faster than what the Federal Reserve and the government have been able to do, which is intervene and kick the can down the road?
Well, I mean, the fact is that government hasn't fixed anything. Obama gets on the stump, and I'm, I agree with Mark Faber. I mean, he basically said that if I had a gun to my head and I had to vote for Obama or Romney, I'd basically tell them to just go ahead and pull the trigger. I believe that. Neither one of these guys will make any difference. There is no major policy difference between the two. It's just a difference, really, of rhetoric. But, the central planning has clearly made the problems worse. They've made the bubble even larger. Just look at the Fed's balance sheets. Over $3 trillion that they've just created out of thin air. By some estimates are by 2015 that'll be over $5 trillion that they've created. Inflation and the cost of food, the cost of gasoline, it's all going up. So they're actually hurting the very people that they claim they try to protect, which is the middle class and the poor. So free market economics and the Austrian School of Economics would have basically have allowed all these banks to go bankrupt. We would have had this creative destruction where within that bankruptcy, all the people that were on the sidelines that saved their money or basically shored up capital, they would have come in, bought these assets, bought these loans, whatever it may be, and that's how you have a successful market where you have a bottom and then you have people that come in and they buy at the bottom and then things build up again. But we don't have that. We have this consumer-driven economy that's just based on debt. And instead of having a real economy that should be based on savings where people save money, they invest it. Instead, now it's just go into debt, and they have to go into more and more debt to basically keep up with just the price, keep up with inflation.
And that's a great point. And I tell people, I'm a free market believer that during the 2008 crisis, I would have let those big banks fail. And then they come back and said, well, if you let those big banks fail, we would have gotten ourselves in a greater depression than we had before. So how could you support that? Well, how do you know that was going to happen, though? I mean, if the government made all the right move, if they keep hands off, if the Federal Reserve did not manipulate the money supply, we'd be able to recover out of this recession a lot faster than having them intervene and bail out all these banks and print indefinite amount of money, which will hurt the middle class in the future.
Yeah, I mean, the Fed hasn't done anything but make the bubble even bigger. So again, they may have delayed a significant crash, but they've made the crash worse when it comes, and it's going to come. It's just a matter of time. What event will trigger that? I don't know. I mean, it could be war with Iran. It could be a number of things, but they've made the problem worse, which is again what central planning typically always does.
And I definitely agree. Now let's look forward to the next 12 to 18 months. The Federal Reserve continue to print money. The government, no end in sight on cutting back on their spending. Looks like they're going to make the budget deficit bigger and bigger. In your opinion, what is more likely in the next 12 to 18 months? Stagflation, deflation, or inflation? I've heard a lot of people make cases for deflation. I heard people make cases for hyperinflation or inflation. And I've had people make cases for stagflation, where you get high unemployment and some inflation. Well, what's your opinion on that?
Yeah, I think definitely when we have the immediate crash, there will be deflation. I mean, we have deflation in things like the housing market currently. So basically when we have the event, which again, I don't know what the event is, and there is that panic, well, you're going to have deflation because people are going to try to shore up capital. Things, prices and everything will plummet. But the Fed will respond like they have been responding by just creating a tremendous amount of dollars. So we're seeing inflation now. We may have deflation before we have the big inflation. Whether or not it's hyperinflation or not, I mean, really, I consider hyperinflation to be a complete loss of confidence in the dollar. I mean, some people will basically, or in the currency, some people will measure that by if it's, running 80%, 70%, whatever it may be. But I think hyperinflation is a complete loss in the currency. And we're not there yet, but we also are dealing, too, as part of this end game, Mo, is the fact that we have China now wanting to internationalize their currency. So the dollar isn't although it's still the world reserve currency, it's now having direct competition as these bilateral trade agreements are being formed that are ditching the dollar as the world reserve currency. So in our lifetime, definitely I believe in the next 10 years, possibly sooner, we will see the dollar lose its world reserve currency status. and it could still be up there with another basket of currencies. But the reason that will happen is because the Fed will continue to debase the currency at home, and that's why I'm very confident we're going to have some pretty significant inflation, and we're already seeing that now. So deflation when we have the event, inflation with possible hyperinflation afterwards.
And that's an excellent point. And the number one treasury buyers right now it's not a country right now. It's the Federal Reserve. They're the one that monetizing all the debt right now because no other country wants it or they're taking less of it now. So yeah, the indication and trend look like within maybe 10 years, the dollar will no longer be the only world reserve currency. It might have a basket, like you said, and I agree with that.
Yeah, I mean, who's going to, that's a good point, Mo. Who is going to, I mean, look at PIMCO. PIMCO, the largest bond fund, they're getting out of the treasuries. They're actually telling people they should buy gold and buy things with intrinsic value. Who's going to compete with the Fed? I mean, it's like let's say talk about being in the housing market. Let's talk about Fannie Mae and Freddie Mac. Well, who's going to compete with Fannie Mae when they're buying 97%, 100% of all mortgages? And of course, nobody's going to compete with them. No one's going to compete with the government. I mean, so that's what's going to happen with with treasuries, and that's what's going to happen with the Fed. They're going to continue to monetize, and they're going to continue to buy up these treasuries because more and more of these central banks, more and more of these sovereign countries are realizing that, hey, if I buy that perception that America has security and I'm going to invest there, it's not everything that it's just not the way it's not like it's always been. Not to mention now we're even the Fed's doing that. Keep in mind, Mo. Last year, again, they bought over 61% of U.S. Treasuries. They did that when we had all the problems going on in Europe, and we still have the problems going on in Europe. So we've had capital leave Europe and go to a safe haven, and even in that environment, the Fed is still having to buy up our own debt. That is not a good sign.
And I agree. I definitely agree with that one. Now, going back to the housing market and its relationship to inflation. Now, historically, real estate has done very well when there's inflation. As of now, we have a steady dose of inflation and high unemployment, and yet real estate has done, as you mentioned, well in the short term, but long term probably won't do very well. Now, do you believe if we do have inflation or hyperinflation, do you still believe real estate would do very well in that environment?
Well, I'll tell you, no, it's not going to be historically. So I don't think you're going to see housing go up in price if we have some significant inflation. I don't think you're going to see housing go up along the same as gold or silver or farmland or agricultural or things of that nature. Now, certain parts of real estate, certain markets of real estate will do well. Over the short term, in I think 12 to 24 months, even in light of the fact that we'll have continuing foreclosures and foreclosures ramp up after the election, housing I think is going to see some benefits from the latest Fed action. How much I don't know, but I can tell you that as investors look for safe havens, more and more investment capital is going into multifamily real estate, or let's say apartment buildings, commercial buildings. It's going into rental housing, because in many of these markets, like I said at the beginning of the conversation, Mo, you have real estate prices at 50% plus below replacement cost. So, and again, give you an example. We buy a lot of bank properties in pools of notes, in big pools, and we're picking up houses for anywhere between $5,000, $10,000 per house, sometimes less. Those are homes that we could put a tenant in for $700, $800, and they're nice houses. So, I mean, it's phenomenal returns, and you're seeing a lot of hedge funds, a lot of private equities that are seeing those returns. And so that's going to drive housing, I think, and help housing for a couple of years with respect to just some slight appreciation here and there. But long term, I think you still have real big structural problems in housing, specifically the loan market and everything along with that. And so it's not going to be the old buy your home and you're going to see it, quadruple in price in the next 5-10 years. I don't think we'll be seeing that for a while.
then that's an interesting point. Now, I want to shift gears here. We have the election coming around next week, and unfortunately, a lot of the young voters who followed Ron Paul or Libertarian don't have much of a choice between Mitt Romney or Obama because they're both the same. But I started to wonder in the years to come if they're going to start influencing politics with their ideas and philosophy. Do you believe the young generation of voters who are starting to follow, Ron Paul, the libertarian ideas, will start to have an influence in politics in the years to come with maybe a third party, or the GOP would evolve into, becoming a smaller government party?
Well, to your latter part of your question, the GOP, I think, is not going to evolve into a smaller government. I mean, in essence, the GOP and the Democratic Party, the establishment base of those parties are in essence the same. I mean, they have the same policies on foreign policy. Aside from some social issues, there's really no difference. The difference is in the rhetoric and how these parties claim that they will govern. I do think that Americans, 35 and younger, 30 and younger, are beginning to realize that the people that are in government now have really screwed it up. They've screwed it up, and they've screwed up their future as well. Now, I want to be really clear. People need to understand that your problems will never be solved by government. So I always tell people, I always take the pathway, Mo, of you have to, understand that you as the individual will be the one that makes the determination of whether you become successful or you basically, hang around depending on government. That makes all the difference in the world. So it doesn't matter if Romney's president, if Obama's president. It really doesn't matter. At the end of the day, it comes down to the individual. But we do have a two-party system that is totally morally bankrupted, and their policies, have gotten us to the point that we're in now. Those policies will take us over the edge, and it's just a question of what happens when the event and we have this kind of real economic crisis. What's going to happen then? I mean, will we have enough people that understand and that realize that limited government, constitutional government, that's the way that we grow economies, that's what allows for maximum freedom? Or will we have people that in a crisis and in an economic crisis will call for more government intrusion, more government intervention, saying that that's how we're going to fix things? I sometimes fear it's going to be the latter, but only time will tell.
Well, if history is any indication, it looked like they'll probably just keep interfering and blame capitalism and free market for the problem, just like what happened in 2008.
Yeah, I think that's a pretty pretty good analysis, Mo. I think that as things continue to deteriorate, more and more people blame capitalism. You see that propaganda all the time. And what's important to understand is that this is not capitalism. In fact, we really haven't had real capitalism outside of the local small business owner that basically has a widget, they're selling it, they got their employees. I mean, that's basically real capitalism, and that's taking place in many countries around the world. But America has always been that beacon of free market capitalism. Well, unfortunately, we have now, at least for the last 10 years, if not longer, have been dominated by crony corporate fascistic type capitalism, state-sponsored capitalism, where we have the government basically taking over major industries and the people at the very, very top. And I'm not, I don't really buy into the 1% versus 99%, but I do think there is a 0.002%, let's say, that are in bed with the politicians. They get the 0% money, lines of credit, and so that type of crony capitalism is what has caused much of the effects that Main Street is suffering from today.
And I agree with you 100% there. And hopefully this will be the last election that we have these two parties. I'm hoping that the next election we have a third party that's more visible and more well-known among mainstream. But we'll see what happens.
Right. So, I mean, basically, I think that people need to. There's only 4 days left, I believe, or 5 days left from the time that we're taping this interview, and I think, Mo, that people need to really take a hard look at: do they want to continue with the two-party stranglehold we have in this country? Do they want to sit out and not vote? Because I know many people are doing that because they understand the system is completely illegitimate. Or do they want to participate and vote for a third party candidate? If someone like Gary Johnson gets I don't know what that percentage is, but if he gets a certain percentage of the vote, that opens them up for government funding next time around, which could potentially have a third party. But I think if there is a rise of a third party, I don't think it's going to be any one of the parties we have now. I think it would be some kind of new party that is formed that's a complete grassroots movement.
And that'll be interesting to see. And Fabian Calvo, thank you for coming on for an interview. If people want to find out more about what you do, where can they go?
Yeah, they could go to fabianforliberty.com for my insight on politics and economics, and if they're interested in our real estate business, they can go to thenotehouse.us.
Okay, great. Well, thank you for coming on. Hopefully you can come back on in the future.
Anytime, Mo. Thanks a lot.